And good morning, welcome to VSA Capital 5 Minute Morning Miner. And I think it's fair to say that we've opened the first window on our advent calendar today, and it was probably silver that popped out. Silver trading over $57. A lot of this, of course, is to do with the Japanese carry trade, which is going completely pear-shaped. So everybody's getting out of it and doesn't want to put money into fiat money. And so going for commodities. But silver is one, obviously, it was one of our top picks at the beginning of the year at about $26. Now, $57. We have a target of $75. Can see no reason why it's not going to go there. But also, of course, we are seeing gold run pretty strongly today as well at 42.40. We're seeing copper run, tin is running. There's a big squeeze on the lithium market this morning, particularly actually on black mass for LFP. But that's a fairly niche little area. Morning, Paul.
Good morning to you. But the weather's not cooperating, I see.
It was dry as I cycled in this morning at 6 o'clock this morning, so it was fine. But it's December. You wouldn't expect it to be wonderful. Anyway, let's talk to news this morning that we've got out. I'll let you choose. Actually, I'll tell you what. There's obviously resources tomorrow. The conference taking place starts this afternoon, then runs through for most of the rest of the week, and so quite a few companies just popping up announcements ahead of that. So we did see Strategic Minerals basically saying they've finished all their drilling. And look at these wonderful drill results. They are wonderful drill results. What we want to do is take that drill rig and give it to Tamar Minerals so that they can go drilling, because then that stock will do what Strategic did and go up tenfold. Also, we've had Cornish Metals put out a statement, basically an update on how South Crofty's going. Lots of great pictures in their statement. Doesn't actually tell us anything. Neither of them really tell us anything new, I don't think. But I think what we've got is a Critical Metals Association report has just come out this morning. They're all having a lovely breakfast in the House of Commons or the House of Lords, one or the other. And just about every single company in Cornwall has been mentioned in it as a special case and should be very, very going all very well. 2026, I think, is going to be key for Cornish and Devon mining. What we've got to do is get the Tungsten West convertibles all converted and back to a normal stock, free up a lot of liquidity for people who've been playing and worrying about the Southwest, and that will actually kickstart a lot of what is going on there, I think. Anyway, sorry, Paul, that's me doing all the talking, not you. What do you want to talk about?
We had some important feasibility studies get released out today, too. One of which coming out from Greatland Resources, of course, the dual-quoted miner in Australia, Copper Gold, that owns the Telfer mine. Well, they just released a feasibility study on their Havieron Copper Gold underground deposit to the east of Telfer, and that particular feasibility study is designed just as the acquisition was designed initially, and that is to combine the two assets in order to give a longer life to the Telfer operation. Feasibility study for Havieron shows 50 million tons to be mined, grading 2.5 grams gold and 0.3% copper, with first gold expected about 2.5 years from the final investment decision, which they would intend to have made once the requisite environmental approvals are granted sometime in the following year, 2026 here. Pre-production capital cost just over $1 billion here, and the initial mine life would be about 17 years or so. NPV 4.2 billion in pre-tax with an IRR post-tax of 22.5% on the numbers used for the FS base case, but 31.5% at spot gold prices today. All-in sustaining cost would be about $1,610 an ounce. So all the numbers are showing that the Havieron will be a meaningful incremental increase to the mine life for the Telfer operation.
Very good. Yeah. Okay. Keep going. Anything else?
Yeah, also a feasibility study on the London-quoted Blencowe Resources, the graphite developer in Uganda, this specifically on the Orem Cross graphite deposit there. That is a deposit where there is U.S. investment there in Uganda in order to help with the development of critical minerals in Africa, and specifically to benefit the United States if it can. Net present value on this one came in just over $1 billion US, with an IRR at 96%, all in sustaining cost $485 a ton over the life of mine, which puts it in the lowest cost quartile in the world. And that billion NPV, I judge, is probably the minimum threshold that they wanted to reach in order to be of appeal to the investment committees of banks, so that they can get some significant debt provision for this capex here. Not particularly high capex on this one either. So I would think that it's going to get financed, particularly with the backing of the United States, and all of their phase one production is already um, assigned for offtake. So this should be able to get financed, I would say, at this point.
Very good. Also, maybe worth just mentioning Mkango. They had a Q3 update. I don't think the update told you an awful lot. They did appoint Hanneman Partners as another joint broker. I don't know if you've got any comment there, Paul.
Yes, I wouldn't add too much to it. Like I say, it was just a standard Q3 result. They do have cash position at September 30 of 2 million, which would suggest that they do need to have a fundraise coming forward here in relatively short order, I would think.
Maybe that's why they appointed Hanneman Partners, but we won't comment on that. Not after the FCA, or sorry, the AIM team have just released things saying they don't want people putting out information that could be misleading. So we'll be very careful what we say there. I think that's probably enough for this morning, Paul. Thank you very much. I've actually got to go to a meeting very early tomorrow morning, so you won't get me. So I suspect you'll be with Ollie, but I'll be around for the rest of the week. Thanks, Paul.
Very good. We'll see you then.
This podcast has been produced and edited by VSA Capital. It is intended for information purposes and not as investment advice. The information is intended for recipients who understand the risks associated with equity investments in smaller companies. Please do your own research and do not rely on a single source when making an investment decision. VSA Capital may derive fees from this content and seeks to do business with the companies mentioned.